Hello everybody, this is my video for the year end 2020 here in the futures markets. So let's have a look at the monthly and the quarterly, etc. So the monthly is going higher. There, it seems there's no holding anymore. Well, my big picture is that we have actually entered a vertical market. The vertical market started at the low, at the spike low of the Corona crisis, and we can see how this is going really vertical here. And I believe we're going to continue vertically up. So we had a little scare last week here with this big two big red bars. This came around when there was talk that there's the second version of the Corona crisis that is more infectious, coming from the UK. Well, we saw this. There was a real possibility that we actually start a deep pullback down, a deep correction, but that didn't happen. We're actually making new highs, so that's a very bullish sign. So when this happened here last week, I was actually you can actually go to the volatility index. The VIX, because the VIX gives you an early warning if there's a volatility increase ahead, and this is what I got. So this is this quick sell-off, a momentum move, and then a consolidation formed. You can see it on the 60-minute. That's an S1 pattern, but it never was successful, so it failed, right? And as it failed, well, this was for me the indication that this is not going to develop into a pronounced pullback, and that I'm still bullish. Very bullish here on US equities. So let's have a look at the Russell 2000. This was lagging quite a bit, right? The Nasdaq, the ES, and the Dow Jones, and now it's on fire, right? That's what we see here. It was lagging, and now it's catching up quite a bit. This is a super trend. That's the very best trend you can get, and we can see as well the spike, which is less pronounced, right, than with the other chart we've just seen. So there's a lot of bullishness going into the end of the year, and I believe that this is going to continue. We are in a vertical market. It can be nicely seen here as well, right? And a vertical market means that you basically are double within 6 or 12 months. Now let's have a look at metals. Gold. We are at a crossroads of gold as well. Very interesting situation now. As you might remember, we have broken the last high here in 2011 at the $2,000 levels. So we had this pop, right, stop run level, and then there's a consolidation, and this consolidation, it's a little bit more pronounced. Well, I expected that because this is a momentum move. The moving averages have fanned out quite a bit, and that typically requires a calming down, like a pause or a refresher. And this is what just happened here with this pattern. That's an S1 pattern. It's a more extended one, as you can see here on the daily, right? And this is it's a very early form of an S1 pattern, and it has rebroken. So we actually have here the opportunity that this is it, right? This consolidation. It's only a shallow consolidation, or it might actually morph into an even bigger pattern. It could morph into a turtle S2 pattern. But for now, I believe we've got a good chance that this was the end of the consolidation, and that we're going to see new highs soon. I like to zoom in into my charts, and here we can actually see, well, that's a turtle pattern, right, with a nice test bar activity. So whenever we actually make here a new high, and I've put my alarms on that level, so whenever it makes a new high, this is not a valid pattern because we are not trending 2 time frames higher. But if this triggers, well, this gives me an idea, that this pattern, right, 2 time frames higher, that this is going to be successful. So I'm waiting basically here for these wicks on the daily chart to be broken higher, and then I'm going to scale into my long-term holding positions. Silver is a small brother that is much more volatile, and this small brother has given a long signal on a low time frame as well on an S1 pattern. So it looks really bullish here. What's going on? We've got a double bottom, very bullish. So this one leg momentum move that has more than doubled prices here from 13 to 30. That's an amazing increase in price, and that this actually is about to be enough of a consolidation, and we should see a second leg of similar amplitude and force and power than we've seen before. And that means a couple of months, a couple of big green bars. So that's basically half a year, right? So I'm basically, so I'm expecting, if this triggers and starts to create follow through, that for the first 2 quarters of coming year, we're going to be much higher. So we could be around $40, right? So that would be quite nice. Now platinum is an interesting crossroads as well, because platinum has been lagging all those metals I'm looking at, and we can see, well, this looks very much like the silver chart a couple of months back, right? There's a ton of stop run levels here. Well, we've just tested these levels. It's just a test. That's not the stop run. It's just testing, and this testing, well, it's consolidating right now, and if we zoom in, well, we can see, well, that's a consolidation pattern. Well, we zoom in, well, that's an S1 pattern, right? And this S1 pattern, well, I'm looking for these highs to be broken. Well, I'm already long, but as a confirmation that my long position is really good, well positioned, I want to see the first stop run move happen, which is up here. So my stop now has been moved here. It's been tightened to this week low. I really like those levels, these very like standing out levels. We had a touch of 200 here. That's nice. So my stop is here, and whenever my stop gets hit, well, I'm more than happy to get out. Right? So it has huge potential. It could easily go to into this range 1,500. So it could easily increase by 50% here over the next 6 months. Now let's have a look at copper. The copper chart has developed really nicely as well here. It's coming from the Corona spike low, and we've been here at $2, and now we are at $3.50. So that's a big increase, and it has just recently this month, or these couple of days, it has broken this last high. That's an important high. We can see that on a quarterly. This is an important support and resistance level. Well, this needs to get broken. It's not yet broken, right? It has just touched it, and only by a couple of ticks gone higher. So now I want to see this high here on the 240 or in the daily, this high to get broken higher, and then we have a lot of room to go, right? Room to go towards the 5. So this could double as well within the next within the coming year, basically. Let's continue to crude oil. In crude oil, we have seen this this brutal sell-off to $740 per barrel here, this sell-off. Well, what we see now, well, that's just a correction, right? We had a dead cat bounce, and now we're developing a second leg. So it's basically an ABC pullback in the overall downtrend. So the market is, it's basically shocked, right, by this excessive move down. The market is shocked, and that's what we see here. Dead cat bounce is nothing like a technical low volatility correction, and we haven't seen much life yet to crude oil. So I think this is the low in this long downtrend since 2008, where we've been at 2020, as you might remember. I think that's the low. But the market needs time to actually find its bottom and to start a new uptrend. And these might be the very early moves in an unfolding uptrend. And I'm looking forward to trade crude oil long in the coming and these couple of coming quarters. Now let's have a look at natural gas. It's very volatile. It's similar to silver. It's a great trading instrument. And here, natural gas, well, it's still short, right? There's a big short bias, and I've talked about that for many years. Yeah, and we've just broken to a new low here on the daily chart, a new low on the weekly, on the monthly and the quarterly. So we've made a new low in this overall downtrend, which means that, well, prices should go even lower than what we've seen here. This is a consolidation. This is a momentum move. So prices should go lower than $2. It's hard to imagine. It might even go to 150, but this has not yet completed its downtrend. There's still a lot of trading opportunities short. Let's look here at some interest rate futures. That's the 5-year T-note, US T-note. Well, it's basically a chart without life, right? It's basically a dead for the time being. Why? Well, we had this huge up move that was during the Corona crisis, and such a volatile up move. Well, it needs to consolidate down and pause. And that's what we're seeing here. We're still overextended here from the 21. So this needs more time. We are here in the sideways price activity, and that can be seen here on the daily, on the 240, on the 60, and all those lower time frames. We can see nothing going on, well because we are in this sideways, and we're way overextended on the higher time frames. So interest rate futures are not interesting for me. For the time being, then they might need to consolidate for a couple of more months. Maybe in six months down the road, maybe we get more trading opportunities. Then last, let's have a look at the US dollar index. It's a very interesting chart indeed, because we have two opposing forces. So this is an S1 pattern that has brought us to a new high. We've broken this consolidation high, and now we've got a big pullback, right? So either that's just a pullback to the base, which is nothing unusual, or I rather believe that we have ended this this uptrend that was on for many years, and that we've started a downtrend. And we can see here on the quarterly chart, well, all this can be seen like a 15-year consolidation that has triggered. And all these levels are stop run levels, so we have room down to the 65 or 50 level. So this looks very good on the short side, very tight stop. And I'm piling in here. I just believe that the dollar is getting weaker and weaker, well, meaning the US dollar index goes down. So we've got a lot of potential here for weakening a dollar over the next couple of years, and that might go really quickly. This is a stop run level. If this gets triggered, well, then we see an acceleration in momentum, in down momentum, in the weakening of the dollar. If the dollar weakens, well, this will have an explosive impact on metals, right? On all hard assets like metals, and as well energies, crude. So we might actually see, once this level down here gets broken at the 85, a little lower US dollar index, we might actually see that that hard assets, including US equities, might start to go vertical. So interesting times. I think the next 6 months will be very interesting for traders, offering a lot of opportunities.